Welcome to the Spice of Life podcast, where we take bold risks, build real wealth, and use money as a tool for freedom and legacy. I'm Luke Spicer, and each week we uncover the principles of ownership, independence, to business and life. Whether you're an investor, entrepreneur, or tradesperson, this show is about creating freedom today and legacy for tomorrow. Hey, everybody, welcome to the Spicer Life podcast. Today on the show, I've got my friend Josh from Entry Point Capital. And Josh, welcome to the show. How are you?
Appreciate you, man. Appreciate you. I'm doing well, doing well. How about yourself, man?
I'm fantastic. I'm really good. So hey, Josh, so we met online through social media, just digging and talking on similar feeds, and then realizing like, hey, we got a lot in common, and we started talking, and I thought, hey, you know what, you've got a different. We have very similar takes when it comes to investing and what's good and what's bad. But you like, other things that are involved in silver and gold production versus the actual silver and gold by themselves. And so I just thought I'd come on and have you on the show and talk a little bit and give, an insight into your world. And yeah, so how did you get started in what you do?
So for the last 6, 7 years, I've been pretty much inclined. I've been managing my own funds, my own portfolio. But about 4 or 5 years ago, right when COVID started, I started helping and building a small community and trying to help people with both fundamental analysis and technical analysis, ultimately helping them better be stewards of their own capital. And then I would say more in the recent history. So like a year or 2 years ago, I really discovered the resource space as more of a point of focus. I realized that a lot of people, especially on the younger generations, who were investing their own capital, were investing in a way or a methodology that was very far from fundamental value. A lot of speculation, a lot of price action, a lot of volume, momentum. But when it really came down to being able to answer simple questions around a valuation thesis, it was really hard to find any sort of tangible content. So that's really the direction I decided to go in. And ultimately, one thing led to another. And now I am growing my community of more like-minded investors, teaching people how to, number one, see value and understand what starts at precious metals, but ultimately companies as a whole, starting at valuations, and then expanding into technical analysis, understanding price action. Because I do believe for some, understanding how that happens can lead to small spreads and returns that can compound over a lifetime. But yeah, that's kind of the quick recap of what I do and how I'm here.
That's cool. I do notice it's kind of neat you have on your background, Entry Point Capital. Not a, it's hard. You need different scripting. I know what it says. It's hard to read advisor on there. It looks weird, but not a
Yeah, I
financial
know. I
advisor.
know. I
So
love this writing, but yeah, it's definitely not the most clear wording.
yeah, and which is important in today's world.
Yeah.
It's kind of funny that when we work in the world that we both work in, um, I'm not a financial advisor either. I'm not a planner. I'm a professional investor and I just help clients with what I'm doing. And if it works for them, cool. Help them show them. If it doesn't work for them or they've got a different idea, like that's one of the neat things too, is throughout the last few years, I've had lots of different conversations with people in the financial space, and they might disagree with what I'm doing or somebody like yourself is doing. And then I'm often like, hey, that's cool. Tell me more about what you do. And because if I can help better serve my clients, then I'd love to, right? So at the same time, so do you have any formal education around what you're doing? Did you go to school
I,
for
I
anything?
Yeah, so I studied in commerce in college, and I went to McGill University in finance. I did drop out. I was literally initially going to be going more in the accounting route. Some family of mine and some close friends are chartered accountants, so it's definitely a profession and a psychology, a way of viewing the world and business that I resonate with a lot. Kind of taking more the preservation route. There's some jokes around the entrepreneur and the CFO in a company always being at odds, where the entrepreneur is always about taking risk and overstretching, and then the CFO, the steward of capital, risk management, is always basically saying like, no, we're not doing that, we're not doing that, and then it's that push and pull between risk and preservation that really makes sure that a business can grow in a way that is sustainable. And I would be more someone of the the financial risk aversion route. So that's how all this actually started, right? It's the idea of preservation before going for a yield, going for a return. But yeah, I personally am among the people who feel like the school system, even at higher levels of education, kind of failed me. Part of why I'm doing what I'm doing is to try and kind of build something that I wish I would have had in forms of financial education when I was younger. Um, but yeah, I do have obviously a certain baseline of understanding from that time in my life. Yeah.
No. Yeah, nice, cool. Yeah, it is interesting actually when you talk about like entrepreneurship versus like, college graduate, university, whatever. And I think like, I mean, I went to trade school. So very different, right? Getting my,
Yeah.
red seal in carpentry and going through and when I look back to that and I think like, oh, I was gonna go be an engineer and an architect. And I think I know more than a lot of architects and engineers from just years of working in the actual business. Just like I honestly feel like I know a heck of a lot more than your average financial advisor or financial planner that went to school for some certificate, right? So um knowing and learning and reading books is one thing, but practical application is a completely different thing. So like you can go, like I always laughed at people that go to business school to learn from a professor who's never had a business. And I'm like, how can they talk to you about business school if they've never started, founded, went through the grinds of a business? That you can't learn that from a textbook. Like talking and doing financial snapshots and things like that. And even in that, like when I think about, so for instance, right? I mean, we talked a little bit, before we got on the air here, and I'll bring some of that up now, but like there's a massive pullback in silver. And I don't know when I'm going to air this, so depending on when you guys are seeing this, right? We're recording
October 22nd, the day
October
today.
22nd. I don't know when I'll release it, in the next week or two because I'm just getting things done, but right now currently there's a pretty big pullback on silver and gold, and I have my um speculations and analysis on why that is. But at the end of the day, right, what I deal with a lot is emotions for clients, right? And again, that's something you can't teach in a textbook, right? And so you can talk about financial analysis and all that stuff. And I think anybody that's involved in the silver and gold game for long enough understands that this is an exciting opportunity right now. But if you
Yeah.
bought on the weekend or last week when it was like significantly higher, it kind of stings to see that pullback and be like, oh man, I bought it if I would have waited. But, if you were 6, 7 weeks ago, you're still thrilled because it's still higher, right? So
Yeah, for
it's all a
sure.
game.
Sure.
And I hate the like dollar cost averaging and all of that stuff when you hear that from the traditional financial side of things, like, oh, just invest $100 every week and when you retire, you'll be a millionaire. It's like, well, okay, like maybe, it's a savings account. You had said some stuff in the last couple of weeks. You were talking about silver and gold and the spreads and comparing it to the 1980s high price and factoring in for inflation. How much work do you do and studying around inflation and what it's really doing to our purchasing power when you're talking to your own clients?
Yeah, so I think whether you're a gold silver bug or you like the mining sector, more inclined to that, like myself right now at this stage of the markets, I think everything starts with an ultimate conviction in where gold and silver are going. And this is the same for all resource investing. If you don't have fundamental belief in the underlying commodity, there is no point to buy a levered vehicle to that commodity. So a miner in this case, if you're buying oil and gas, an extractionary business. So to answer your question about inflation, ultimately it is the foundation of my investment principle. So understanding how inflation plays a role over that course between the 70s and the 80s, between around the year 2000 to 2010 and now, understanding the different models and how to actually adjust for inflation at the different rates that we use has a completely different conclusion to the thesis of where we're at in the cycle, what these metals prices are, and not just in number terms, but in actual reality and value, right? Because that price and that value are very, very different. I like to say that if you look at current prices, to me, Silver has actually pretty much never been cheaper. I'm not talking about this year, but again, if we zoom out and we look at, let's say, the last 5 to 10 years, based on the currency expansion, the gap between the growth there and the price of silver lagging, silver is extremely cheap. And I find personally that is incredible because the fundamentals of silver through industry and through the average person like you and I, who, unlike central banks, right, they call silver the poor man's gold for a reason. People like us like to buy silver a lot more than just gold, right? Especially because it's easier to access and buy, lower price, and yeah. So ultimately, I'm of the opinion, which is obviously more tinfoil hat on, that inflation is closer to around 8 to 10% on an annual basis compounded. I don't think that it's that contrarian anymore to believe that, interestingly enough, because a lot of this data is accessible. I think if you still believe in the 2 to 3% CPI today, I think there's a lot more problems with that model than the model that I'm using. And I'm guessing you and I meet somewhere, at least in the middle there. But yeah, and I don't know if you want me to kind of present that graph and the different numbers and how that kind of models out. But
Sure.
just going through that, you really start seeing what can be possible, and it starts being quite interesting to know, like, well, when you see the news release that says like something like gold is way too high right now, or something like silver is way too high right now, but when you have these models for inflation, it can kind of bring you back to reality. It's kind of like a touch of grass moment where you can take a step back and look at things and holistically realize, like, are we actually overvalued right now, or is there more to the story that's being told to me? So here, I'll share my screen with you here.
Yeah, I do tend to uh agree. I want to say mirror, but no, it's not a mirror. I completely agree with you that the inflation index is much higher than what we're told from the CPI index. They use that, they convert, they use different items to declare what's gone up. And I always say to people, I'm like, forget what they're using in that graph, compare the things that you absolutely need and look at it year to date, right? Or year
Yeah.
over year, like fuel and food and things like that as a whole, what you spend, because that's what really matters. So
Yeah, and then there's also the idea of consumer goods, right? The 3% number of CPI, right? Let's give them the benefit of the doubt, because sometimes I do like to model things out using their figures. Let's give them the benefit of the doubt and say, you know what, 3%, that's exactly what's happening with consumer prices. So things that the average consumer will buy. That still has never been the definition of inflation, right? Inflation is always the expansion of the money supply and credit. So, and that's actually one of my big problems with modern economics and finance and the way things are brought up, right? Because you can theoretically think of a scenario where if I snap my fingers and double the entire currency in the world at this very second, and I put it in your pocket, Luke, and you go to the corner store, prices didn't change yet, right?
no,
Maybe you just leave it under your mattress for the next 3 years. But it doesn't mean that it didn't happen. It doesn't mean that there's now twice the amount of currency and that we have more systemic risk embedded in our monetary system. And this is really
yeah,
one of my biggest problems, is that that is never mentioned, right? The fact that most of the money that's created through debt doesn't go into consumer goods, right? If I have $1 billion and I take out a $500 million loan against my collateral, how many more groceries am I going to buy? Like, am I gonna maybe one other place to rent? But ultimately, most of that money is not going to go in consumer goods. Most of
no,
that
it's
money is
true.
going to go in assets. And then the big problem arises when that money comes out of assets, because then it starts chasing real things, right? Then it can start chasing goods and services. Then it can start chasing all kinds of things and have rippling effects, right? Because all of a sudden, that 3% that you've been discounting every single year can shoot up to 30% real quick. So
Yeah. I
yeah,
actually, it's neat when you talk about printing money. There's this analogy that I read, like, and everybody's played the game Monopoly. A lot of people have a house rule of Monopoly where they put the fines into free parking, right? Obviously, if you hit that free parking big lottery square, and there's a bunch of cash on there, it usually can propel you in the game to do a lot better. Um, but then I read this thing where it was like, you got a family, everybody's playing. There's lots of squares on the board. available for purchase, and somebody goes to the closet to get like a box of tissues, and they see another game of Monopoly, and they bring the game back with the tissue, and they're like, "Yo, we found this other game. What if we just took all the cash from this game and we equally divided amongst the four people or the six people that are playing? It'll just make the game more fun. We'll have more money." And then I always say, I'm like, what's the first thing that people do? Well, they start to overpay for the properties when they go up for auction because people
They all
can,
have more
and,
money.
and, it,
Yeah.
and it's just human nature. They're like, well, I can pay more because they ultimately know that the cash is not what's going to get them ahead in the game, much like life. It's the acquiring the assets. And then when we look at it right now, you're like, why are you not acquiring the assets that are appreciating faster than the currency supply is destroying your purchasing power? So go into your graph because I'm curious to see this.
All right. So we have two different versions of the same thing. And this is important because ultimately we have to be intellectually honest, right? So number one, I take the all-time highs and nominal price in the 1980s, right? And just to give people some context, in the 1980s, we had this massive spike after the disconnect of the gold standard in 1971. So at the high of $50 in 1980 for silver, if we adjust it for the 3% CPI, or as you so beautifully put it, CPI, today we get to $189. If we use real CPI, which is, you can find it on Shadow Stats, they basically don't use any hedonic modeling, no substitution. So we have that same basket of goods evolving over time. We get to $688 an ounce. And if we adjust for asset inflation, and as we kind of touched on a couple minutes ago, right, most of the money that's created goes into assets today, not into consumer goods, sorry. And at that point, we get to $2,416 an ounce. Now, again, we have to take into account this was a high created by the Hunt brothers through a lot of manipulation,
Yeah.
short squeezing the market, right? We had around 200 million ounces that were just being held up. So what I then do is I take the lows, right? We want to figure out, okay, well, at $5 an ounce in silver, how does things adjust for inflation then? And this is where we get to, on the 3% basis, get to $19, right? I think you can probably tell me a lot better as a gold and silver dealer. I'm pretty sure we were at $19 just a couple years ago, right? Even after COVID, we touched, I think, $15, $16 for a couple months there. I might be a little bit off in terms of the nominal price, but I think it's something in that range. From there, on a 6% basis, so adjusting for real CPI, we'll get to $69 an ounce. And then adjusting for asset inflation, we get to $241 an ounce. That's not taking the high of silver back then. That's taking the low of silver back then. And this is why, to me, this doesn't take into account stronger fundamentals of silver today than there was before, right? So this, to me, is just the same value for the same item, right? But the intangible here is that that item back then has a lot more value today, is used in more industry. There's been a silver deficit for the last 5 years that we can only make up for through recycling. So to me, if anything, there's a case to be made that we should probably see an overextension here and not just keeping up with asset inflation. So
Yeah, and interesting enough, I looked real quick while you were talking, but yeah, most of 2022 it was around $19. It was like up and down. I just looked back on a graph, so it's yeah.
there we go, right? So we're basically hovering between the 3 to 6%. We're never getting to that 9% full realization of value, right? And that's what, to me, sounds pretty crazy, right? Because people say that it's speculation, that it's risky, but ultimately, I don't really see much risk in when it comes to precious metals, right? Gold in 1971 was pegged at $35, and today it's sitting at 4,000, right? That's over a 100-fold increase over a 55-year period of time, right? Like this idea that it's suddenly just going to crash and never come back up, when history doesn't demonstrate that ever. Recent history doesn't show us that. Long history doesn't show us that. Yeah, I'm just an absolute bull when it comes to silver on the long term. Don't ask me where it's going to be next week. Don't ask me where it's going to be next month. But I know that if in 20 years, if we look back at this, silver is going to be higher, not lower, and it's going to be more desirable, not less.
Yeah.
Same thing for gold. If we just run through that real quick, right? Bloomberg and several other financial news were pushing out this summer that we were past our inflation adjusted highs. And again, I made a small video about this on my page, right? This idea of inflation adjustment, like who makes the rules, right? Like they're smart enough to know exactly what they're doing and how they're phrasing it, right? They're not using inflation, and they know this, right? And a CPI level, we get to 3,200 on the highs of 1980. At shadow stats, we get this 11,000, and then the asset inflation number is 41,000, right? So it is so far the amount of intellectual dishonesty that it takes to put out a press release like that is something that really gets to me to its core. But again, in the name of transparency, I also use the lows, right? And when we use the lows after the highs in the 1980, we still get to some pretty high numbers, right? We get to 1135 if we take CPI as it's printed by the government. We get 4100 if we use real CPI, and we still get to over 14,000 with asset inflation, right? So I personally think, like, look, at least gold has passed that 6% level. Silver hasn't yet, but I really have a hard time seeing how people are making all these claims that gold is hyperextended and overvalued, right? Like, if we want to talk about fast movement in price, like if we want to put a technical analysis hat on and say there should be a retracement, a pullback over the next few weeks and months, I'm fine with that. And I'm sure even you, Luke, like you're not going to argue with people like that. Like, probably when a bunch of people start buying something really quickly, of there's going to be some form of correction at some point. But this idea that like 5, 10 years from now we don't know how things are going to unfold is ludicrous in my perspective.
Yeah. Yeah. Yeah, I completely agree. And that's why I'm like I find it when we start to study like a lot of stuff that we do too is we take because looking at wealth cycles and looking like where we're better off to position our money from time to time is kind of what we do, right? So it's when you look at how many ounces of gold it takes to buy a home or a car or the S&P, you start to find very different um, ratios comparatively, where all of a sudden, regardless of what the dollar value is, there's going to come a time where it makes sense to see, moving out of gold and moving into something else because it's way more undervalued. Where most people are just talking about the price point and they're like, oh, well, it's pretty expensive these days. It's like, well, is it though? Because when you compare it, like you're talking about, to other things, it's not anymore, right? So I really like that. I hope that explains some things to people. It was clear and concise. That's why I liked your video that you put out the other day, just to kind of see, show things for people. Um,
Yeah, no, for sure, for sure. And to kind of touch on that, right? This idea that eventually it makes sense to rotate out of gold. The way I view it is actually like, look, I rather people view gold as an investment if that's what they need to do in order to buy it, right? Like, and again, not a financial advisor here, but ultimately to me, gold isn't an investment. Gold is the neutrality. The investment is what you have in the currency that's sitting on the sideline, right? You invested out of gold, you divested from gold to buy a currency that you're holding now, right? So to me, there's always a reason to get out of money, right? Which gold is. And the reason to get out of money is to invest. And that's why I'm saying in my mental model, gold is the neutrality. And then there always is a case to be made to invest the neutral money, right? And that's why, like, I'm not necessarily looking at gold as making a yield. And that's we connected on our first call, and we kind of resonated on the idea that we've never really been paid to go into preservation. Normally, the price you pay for preservation is no upside yield. But in a year like this year, we're being paid to be preserving our wealth, while other people are being penalized to take the risk for upside potential, right?
Paper money's losing power, but real money, it's been trusted for 5,000 years. When banks print, inflation steals, and markets shake, gold and silver stay solid. Don't wait for headlines, own what's real. Visit learnwealthcycles.com and start building freedom with physical silver and gold today.
That is completely a distortion of what's normally happening when people are investing or not investing money, right? So I one of the reasons I get into mining is because that's how I see it, right? I'm like, if I'm not going to be in the precious metals, if I'm not going to be in money, I damn well invest in a business that's going to generate a yield, but I don't want a yield that's exposed to US currency risk. I don't want a yield that's exposed to Canadian currency risk anymore. I want a yield that's exposed to the real deal. I want a yield in real money, which is gold, silver. I even like copper, manganese. I like graphite. But that's kind of it. Like I said, I think for the most part, people still view gold as an investment, which I don't think is going to change from one day to the next. But I do think that was not the case if you look at human history, right? This is a very new concept, the idea of I'm investing in what used to be the money in the first place.
Right, it's true. And it becomes an investment now because it's just the word that people are using, but you're right.
Yeah.
Preserving your purchasing power, preserving your wealth is like a real thing. And I've said that lots, even this year especially, it's been kind of extraordinary in the growth that we've seen for silver and gold this past year. But like if somebody were to be sitting with $10,000 in cash in January in their bank account, their screen still says $10,000. They think they're good. They're not factoring in how much $10,000 bought them in January versus now. And like you talked about consumer goods and stuff, maybe it hasn't really climbed up, to where somebody notices it because you go to the grocery store and you buy, like I mean, Halloween's coming up, but we're out in the country. We don't have kids out here, but like you get those hundred bars of chocolates that are like the Arrows crispy crunch and whatever, right? And I bought a box the other day because my girls were like, "Can you bring home some chocolate?" I was like, "Is this good?" They're like, "Yeah, that's great." I sent them a picture, right? I bring it home because it's a hundred bars and it's usually about 19, $20. That's usually what it is. I bring it home. I don't think anything of it. I'm like, oh, $100, nothing's happened. Well, then you open the box and I'm like, it sounds stupid, but I'm like, these bars seem smaller, like literally like smaller. And one of the girls had some candy from last year still, downstairs. So she goes downstairs and she grabs what did she have? A coffee or a Kit Kat, I think. And pulls it out of the package to we're comparing the bars, right? And like it's minor, but it's different. And yeah, it was like a couple grams. So like, on the 100 bars at 2 grams a piece, that's 200 grams. And then you look
Adds
at the
up.
box, and it's like the box had 1.1 kilograms or whatever of chocolate in it last year, and now it's got like 999 or whatever it was. Like it's
Right.
different.
So,
And you
so
don't,
you have the shrinkflation, but then ultimately as well, what you'll also see is it's probably even a higher price, right? You paid more while there's less. And
yes,
what they'll probably tell you and they'll measure is you'll just measure the change in price. So let's say it went up 3% or 5% at the grocery store, but then you also lost 5% in quantity. Then you
yeah.
have to factor both of those
Oh
100%.
yeah. And it was just neat because like the price was pretty much the same. It probably was more, right? But I know that it was under $20 for the box. It's always kind of been around that $20. So then we started Googling, like size of the Nestle or whatever it was box. And then you look back and 4 years ago, it was even bigger. It was like a kilogram and a half for the same price. And so, they wouldn't want to go, oh, well, now you get 80 bars in the box for the same price, because then people start to recognize that and they don't realize it. And they're like, oh, and not that we need a whole bunch of chocolate, right? Like I understand that too. It just was something to like point out because you don't really realize it. But had you invested $10,000 into silver at the beginning of the year or gold, right? Now you're sitting on like 16 or $17,000 worth of purchasing power, right? Like, yes, you need to sell it and you need to do these things, but it's like it's outpacing inflation on the high side by a lot, where like the S&P 500 basically grows at 10% annually is what most financial planners will tell you. And then it's like, well, yeah, so then why do I need a financial planner? Just invest in the S&P and call it a day and save myself the MER fees. But all the S&P is doing is growing with inflation for the most part. So
Yeah.
every year it just continues to climb with the currency devaluation. And so I'm like, you're not getting ahead. You're seeing like, hey, I put in $100,000 over the last 10 years and now it's worth whatever, 200,000. So you're like, hey, it's been growing 10% a year. I'm doing pretty good. And it's like, yeah, but 200 grand only buys you what 100 grand bought you 10 years ago. So you're not getting further ahead. And most people miss that. And I missed it myself. It was like a few years ago, I was like, God, we're profitable in the company. We're making money. I'm like, I just feel like I'm haven't been getting ahead for years. And that was when I started having a talk with my boss again. Like he was just always been a mentor of mine. And I was like, man, it just doesn't matter how much we do. And he's like, yeah, because and then we started to have this talk about purchasing power, about inflation, about all these things. And, you know, then don't even get me started about taxes, like it's a
Oh,
whole
yeah.
thing. Why do we pay taxes if they can print money? That's what I've always said, which is why I don't like to pay them. Um,
Well,
but so Josh, like what can a client expect? Like why would somebody come and work with you? Right? Like what services do you provide for somebody? Because I see you're posting, you're posting good content. I'm part of like the group that you've got started. So people are sharing things which I really enjoy in there. But like what does it look like? I want to work with you or somebody wants to work with you. What does that look like?
yeah, so I do different things. So right now, my 80/20, the thing I'm trying to focus on the most is really the community element to it, which there's no service, there's no cost to a service there. What I'm trying to do is build a community. I have 2 weekly group calls on Tuesdays and Thursdays. And I go over current macroeconomic outlook. I go over some geopolitical risks to the overall thesis of whether it's the markets going up or precious metals. And then most importantly, I go over my valuations, my research of the companies that I like and track, right? All this for primarily educational purposes. And then on the side, I do some one-on-one consulting. And this is where I teach people in a lot more personalized manner. Number one, I go through, you probably appreciate this quite a bit. I go through the history of finance and money, right? Not just modern history, but further back. So people really understand the evolution and how currency erosion has always been there, right? It's been the same playbook throughout history. The only real difference here in the last 100 years is the innovative tactics at which we've been able to use to extend the elastic band, right? It's always this idea of like, let's extend it until it has to just forcefully collapse on itself. But we're just getting really, 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 really good at right at that point of failure to figure out a new way to keep extending it, right? And I think a lot of people today are walking just without with misconceptions around that foundation, and therefore not really properly interpreting the risks that are facing them on their day-to-day life and their purchasing power and their future investments and the future for their families, for their kids. So that's really the first part. And then moving on from there, I go into valuations, teaching people fundamental analysis, how to value companies, how to look at risk, asymmetrical risk, real returns, right? And then I go into technical analysis and then leading into my current thesis in the markets today. My overall goal is to be able to bring in some analysts in the precious metal space, in the resource space, more contrarian investors, and be able to offer more of a education-based platform. So something that competes more with university-style education and less competing with financial advisors, where I'm not looking to be telling people how to invest. I want to give the fishing rod. I don't want to give the fish. I want people to kind of become the master of their own futures when it comes to their foundation. Right. I think it's something that every human should have. If you have a kid today, which I know you do, we teach them certain things to ensure their survival, right? 1,000 years ago, if you had a kid, the first thing you'd probably teach them as soon as they could learn is how do you eat? If you need to hunt, then that's what you're going to teach them. How do you get water? How do you survive, right? This idea that we don't have a fundamental rudimentary understanding of money and risks in our environment, when that is the vehicle, that is the medium we need to survive, to eat, for shelter, to me it is absurd, right? It's basically me not teaching my child how to hunt 1,000 years ago. So like I'm just trying to do my part and build this. up to this point, it's all been just equity, sweat equity, and time. But it's been a great fun journey. And personally, I've been rewarded very, very well from the markets myself. So I obviously have the conviction in the space and in the value that's here. And it's just about trying to spread the message, spread the word, and then grow the community.
Right. So, and you said you do this for free. You don't charge anybody anything.
Yeah, that's right. That's right.
Yeah.
Now, that being said, I'm just taken on a whole batch of one-on-one individuals that do my curriculum. Moving forward, everything that has to do with one-on-one is going to probably come at a cost. I still haven't decided the logistics around how I'm going to
Yeah.
be bringing that forward, but my entire community and group still today, and again, October 22nd, 2025, is all free. I do add some friction points for people because I don't just want everybody and anybody, meaning like I like to get some comments from the person who's interested in joining. I typically ask them to watch one of my group calls. Like I want to know that this is someone who's intellectually stimulated by the current environment, that has certain points in common. And yeah, overall,
Yeah, and it will like contribute to the group and that kind of stuff, right? I mean, you want to have somebody in that regard that's like um yeah,
yeah,
not
or and
gonna,
if you can't contribute, curiosity is a great contribution as well. I recently, this week and last week, met with several 16, 17, 18-year olds. And they are some of the most fascinating people to be working with when it comes to education, right? Like they ask a lot of questions and they have, I saw the definition of intelligence. One of the best definitions of intelligence I ever found was elasticity of the brain, right? Our ability to take in new concepts and change our mental models at a fast speed. And this young generation is incredible at that. You give them a few pieces of information and they can very rapidly change their model and ask brilliant questions from there and keep going. So, again, curiosity can be an incredible contribution, even if there's not necessarily an in depth understanding or research that's already embedded in the individual who's coming through the door.
right, which yeah, it's true. I mean, it's why like young children can learn multiple languages at one time, right?
Yeah.
Way faster than adults because we just get to a part where and it's kind of strange to me because if somebody really wants to learn something, they can still learn it fairly easily as an adult, but it's often that people bucket. They just want to do the same thing they've always done. I take a very similar approach to you. Like we really want to educate clients and build a stronger foundation because much of what they've learned throughout history, through the financial and banking system is not designed to benefit us as people. It's designed to benefit the banks and the people, running them, right? And that often comes across as like conspiracy minded or whatever, but it's like just look around, like throughout most of the manipulation that we've seen this year alone in cryptocurrencies and the market and silver and gold has benefited certain individuals and certain groups in a massive way. And it comes at the expense of the volume of people, right? Like look at when Trump was talking about cryptos and Bitcoin or whatever, and Bitcoin did that big plummet again, right? And there was trillions lost and somebody gained it though, right? And so it's like, these plays, these tweets. I shared a meme that was Barron Trump saying, "Hey, our shorts are going to fail. Can you make some crazy tweet about China so that we can profit from that?" And then he's like, "Yeah, you got it." And then that was just the meme, right? And it was like, yeah, okay, you know. I so so do you do anything else then, Josh, for like income, or do you just trade and do your and
Yeah.
that's what you
So
pay for your
up
life?
Yeah, so up until the start of this year, I was doing sales and business development for other businesses as an independent contractor, and I manage my own Airbnb and others as well. Three in Dallas right now, in Toronto, another is I'm in Montreal, Canada, so another person that's property. So I do these side projects, but really the bulk of my time has been going into research. And now only the last few weeks since I went more on the the public channels, because up to this point it was all just word of mouth. Now it's been content and it's been more community driven, new faces, new connections, and A lot of fun, man. A lot of fun. But the plan is to keep growing from here and to have a lot more focus on the education component. The group calls are really just going to be a way to have touch points with the community on a weekly basis.
Right. Yeah, and then obviously if somebody's wanting, is that kind of what you do with your one-on-ones? You're doing more education for those individuals on a like case by case basis? Is that kind of the idea?
Yeah, so I have two students of mine who have one a bachelor's in finance and the other one a master's, right? So obviously I tailor the program to them in certain instances. But what I've realized is no matter how much education you get in finance at university, higher levels of education, other places in the world, right? There's a lot of gaps, there's a lot of blind spots in your understanding of history, right? You look at Keynesian economics, for example, just our recent models to me are flawed, right? So I think in some cases, even if people come in with a lot of knowledge, there is a degree of how can I say this? We need to go scratch a little bit at the foundation and sometimes change a few things, or at least challenge the foundation that's already there. I would actually say probably my favorite students are those who know nothing, not because it's necessarily more fun, but because it's actually easy to teach them, right? Someone who knows a lot, especially if the foundation is flawed, it can be very challenging at times because
Yeah,
you're
it
you're
is funny
stuck in
too,
your
especially
ways.
especially yeah, they're stuck in their ways and their ways haven't produced them the results that they want, but they still want to argue with you that whatever you're doing is like so different, but
Well,
it's like
I would argue that up till this point, they have, right? Like up till this point, the I would say yes, inflation has been bad, but ultimately the American project, this idea of central banking, the reserve currency of the world, up to now, yes, there's been cracks, there's been all kinds of small blowups, but up to now, it's it's hard to argue with the fact that the results have worked, right? And I'm not saying my whole thesis is built on the fact that this can't go forever, right? Now, Warren Buffett's quote is this idea where the market can remain irrational longer than we can remain solvent, right? I'm not here to try and predict when it's going to change, but I would say that it is recency bias that you face by using new finance or economic models will actually feed into this idea of Keynesian economics, right? That currency expansion, it can be done responsibly, even though it is nonstop, right? This idea of stability is everlasting inflation, when 100 years ago, stability meant stable prices, right? All of these models have changed dramatically. And while it has caused problems, they've been able to, again, innovate their way out of those problems at a fairly fast speed, almost matching the speed of the problem expansion. Now, I think you and I both agree that that can't keep happening, but I think that we'd be saying this for the last 50 years, right? So I think there is a case to be made that the problems just keep getting bigger and the solutions keep getting more complex, and there's still huge currency destruction. There's still tangible realities that happen regardless. But I mean, ultimately, things have worked more than they haven't for the systems that be.
yeah. Yeah, it was funny. I started to pull up like I wanted to pull up the as you're talking, I'm like things haven't changed. I'm like, yeah, but it's like so many people, it's like harder and harder. Like you look in the US right now at the I mean, and I always use the US because it's 10 times the population as Canada. So
Yeah,
it's got a
yeah,
bigger
yeah.
you know, demographic to pull from. What happens in the US typically happens before it happens in Canada. Their lending is a lot more flexible. We've seen it change in Canada quite a bit, which is starting to show more cracks in the system. But I had read a thing about the poverty rate not long ago in the United States, and like I think it said something like 60% of Americans are like one paycheck away from like poverty kind of thing, like they're literally paycheck to paycheck, and that's grown quite a bit. But then my brain quickly switched and I typed in that particular day. I said, what percentage of Americans watch 3 hours of TV or more a night? And it was 54%. And I was like, well, there you go, right? I'm like, okay, well, what do you do? And like, I'm not saying that TV's inherently bad in itself, but like if your life's not going very well, in any area, financially, physically, emotionally, spiritually, like then why are you distracting yourself with things that just make you feel better in the moment, like i.e. checking out and watching TV? I consume a lot of books. I watch a lot of documentary type stuff, researching, I really enjoy it. Do you like to read?
Yeah, I'm actually bigger on either conferences, podcasts. I'm really more I like to see and to hear. I have a hard time with reading on a very long period of time. I do when there's a good book, I'm always big on audiobooks. Personally, I can
Right.
go to the gym, I can walk outside and I can listen to it. That being said, though, my definitely my favorite form of information gathering by far is video. So conversations like these, but ultimately listening to whatever field we're considering, listening to the individuals that have actually made a name for themselves in that field, and then curate the nuggets of information that they've left through time, right? And
Right.
we're at a point in history where this has never been so easy and accessible to us, right? Like I can find tens and tens and tens of hours of Warren Buffett, Charlie Munger, if I'm looking at value investing. I can find information from everybody under the sun, and I can find their names. I even have today AI that can help me with all of that.
Yeah.
So I really think like it's it's about understanding how we best learn and develop our knowledge base, and then we don't really have an excuse not to do it. As you said, like this idea, like I'm just going to watch 3 hours of TV. It's like, well, if there's no library in your town 100 years ago and you don't have a book and you're not learning, like maybe there's a case to be made why you're not necessarily growing as an individual in terms of your knowledge base. But I think today everything is there. I think it is our individual responsibility to educate ourselves, to learn, to expand. There's a famous quote: "If you're not growing, you are just slowly dying." um, so yeah.
I I agree with you there completely. I mean, I don't understand why people don't value their own brain and education more, where they want to like learn and expand, and it doesn't have to be like about money either. I mean, I know we're talking about investing and that kind of stuff, but even, just developing and harnessing your skills on a daily basis, like going back to the trades world, I would go to conferences or different, trainings and take new skill development courses and things like that so that I could get more advanced in my understanding of the material and what I was doing, because it helped me be better at what I was, involved in. So kind of the same thing now, like watching YouTube and, videos and learning. And yeah, I read because I enjoy reading at night. It helps me, fall asleep. Some nights I'm guilty of doom scrolling Instagram, right? So, but I do enjoy reading. How do you like search through content that you're going to consume to like what kind of um filters do you put on it so that you know that you're consuming something that makes sense? Like,
I personally like to go on the extremes. I think a lot of information can be found on both extremes, and then it's easier to ground yourself somewhere in the middle, right? So let's say I'm looking back in my investment thesis. How let's say I'm looking at oil and natural gas. Like I like to listen to people like, for example, Rick Rule, who's a massive resource investor, worked a lot with Eric Sprott in the past. So he's somebody who has more of a bullish thesis over the next few years on how oil and natural gas is going to at least stay the same in terms of utilization in the world, and then possibly even grow from here, against what many analysts keep predicting, that we're going to basically crash in terms of oil and natural gas uses all around the world. Now, that being said, like if I were just to just listen to this one person and their analysis, I have several blind spots, several issues on my way of looking at this holistic, right? So I do listen to the people who are also working on top top of the line solar energy, top of the line hydro, top of the line wind farms, because ultimately all of these different technologies, and today nuclear, I think we're whether it's decades or years away from more and more breakthroughs on the nuclear front. I think all of these things can impact each other, and it's practically impossible for one individual to have a model that computes everything in real time, right? So it's like we owe it to ourselves if we're trying to predict things into the future. Number one, to assume that we're wrong, to start on the premise that we're wrong. And then number two, when we find somebody who's making a lot of sense, I think our first reaction is to gravitate towards that opinion and just say, yeah, that makes sense. That's right. Right. I like to take it like one step further, which is like, that makes sense. Why is this wrong? What would be the counter argument to this and that? Because I think if we stop at that first level, which a lot of people do, you trap yourselves in like an echo chamber of perspective. And that's in investing, especially, that's really, really, really dangerous. Right. There's another contrarian, name is Doomberg. I know if you see him, he has like it's a little bird icon. It's been in all kinds of podcasts and news all around the world. He's a contrarian investor. However, he actually sees oil prices going down, not because the usage is going to go down, but he sees oil prices going down because he sees natural gas going up. He sees basically oil being a byproduct of the production of natural gas. So the cost of oil to produce shooting down dramatically. Therefore, if the costs go down significantly, then more and more pricing destruction on the downside. So basically a deflationary environment for oil. So these are all really interesting cases that you want to be able to add to your model and listen to as many as possible and then figure out where you decide to place yourself. And again, acknowledging that you're probably wrong. And what do you do if you're wrong? You're learning and you keep trying to change that model with current events and current information. Which in today's world, I think we can all see current information and new data comes quick, right? You can get things, a new breakthrough, a new change in the world, a tweet from Trump that can come in and possibly change an entire mental model that you've spent 3 years building. So it's important to stay on it and stay up to date.
Yeah. And I love that approach, and it's actually really good. I mean, the best way to argue anything is to learn how to counteract that argument, right? Like how if you were going to go to a debate, the best way to debate somebody is to know their side of the debate completely inside and out so that you can actually counteract it. So that's actually really good of a filter when you're thinking about investing, and especially investing when it comes to your money and kind of where it's at. And so, yeah, I mean, if you're in the traditional space and you understand, that's what's happened with me with a lot of clients is they've come to me because they like the idea. And then as it starts to get real and we start to move down the line where we're going to start to move funds and do whatever, then they start to have like some different questions. And often I just say like, well, what are you currently doing and how's that working? And then when they realize they know less about what they're currently doing and more about what they're going to do, I'm like, is that not a problem? Like, I thought you had a financial advisor that's helping you with these things. You mean you just turned it over to them and don't know anything? That's scary to me. It's risky.
You
So
give them the castle and you lock the door. Yeah.
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 So where would people find you, Josh, if they want to reach out and they want to learn from you? What's the best way for them to get a hold of you?
So best way right now is through Instagram at the Entry Point Capital. For the time being, that's going to be the main area. I'm going to be expanding on YouTube, TikTok, and Facebook very soon. And yeah, if you're interested in keeping up, possibly joining a community of like-minded investors and individuals. Always happy to have you guys. So feel free.
Right on. Well, hey, Josh, I'm really glad you could come on the show. I hope some people find your information that you shared today helpful and keeps them going down the path of enlightenment and learning, for themselves and their future. And yeah, go check Josh out on his Instagram page. And hopefully we talk to you soon, Josh. Thanks for coming on.
Appreciate it. Talk to you soon, man. Take care of yourself.
You too. Bye-bye. When the system shakes, paper wealth disappears overnight. But real wealth, it doesn't flinch. Gold and silver have outlasted every currency ever printed. The question isn't if this next storm comes, it's what will you do when it does. Visit learnwealthcycles.com. You too can own what's real.